This is a debate. We've got the bull and the bears kind of coming out there, although I would say that there are folks out there like Brookfield who have a good amount of exposure to that market. So they have some weight. Where do you stand on this? How good or bad is the commercial real estate market right now?
Well, you've quoted two of our clients and the types of institutions we do business with all the time. And the book is being judged by its cover. Office space is one reality. Within office space, older, lower quality assets in urban areas is one story, and the rest of the office market is another story. The banking system has an overall total exposure to office loans that equate to about 3.5%. So the coverage on the risk side of commercial real estate is so broad that it's creating this overall negative impression. You look at multifamily properties, they're operating very well. A little bit of softening, a little bit of oversupply, but solid fundamentals. Self-storage, hospitality, shopping centers have all staged either a great recovery, like in the shopping center example, or have had really good supply-demand conditions. It's really the concentration of older office buildings because of the hybrid work environment that is under true distress. The rest of commercial real estate isn't really under distress.
Is there a case to be made? Is there a reason why the focus is on that part of the market that could be a potential downfall? And the reason why is because many times in history, it's been kind of like that unseen factor or that piece of the market that people aren't necessarily saying is going to be a big deal that could cascade into a bigger deal down the line.
Contagion is the concern. The total exposure to the obsolete portion of the office market is so small that we don't anticipate that contagion to become a problem for the industry or for the banking system. What is happening is the mark-to-market on the true obsolete assets, and those mark-to-markets are significant. The rest of the business is being repriced because of interest rates. And a year ago, we were both concerned about interest rate increases and whether the economy was going to go into recession or not. Today, we know the Fed is getting very close to an easing cycle, maybe a little bit longer than we anticipated, but we're getting there. And we have much more confidence that the economy is not going to fall off a cliff. That's why you're hearing from various institutional investors that it's the time to buy. Prices have adjusted. There's record capital on the sideline. And when you combine those two with the confidence that the economy is going to hold up pretty well, you're going to see capital come back into commercial
Where are
real
you
estate.
seeing the client conversations that you're having right now? Where are you seeing the most interest in where that opportunity lies within commercial real estate?
Fascinating to see the demand for shopping centers and retail in general at the highest level in 25 years, both from a tenant perspective and from an investor perspective. By the way, we're the largest investment brokerage firm in North America, as well as financing, which you mentioned, and we're seeing demand for multifamily and shopping centers come back very strongly this year, followed by good quality office space in suburban markets. There are many metros around the country where you have sub 15% office vacancies, and that's a contrarian play we're seeing more and more of.